The agency is just one part of the entire system of insurance. How does it fit into that overall system? Where does your job fit into the agency? We're going to talk about that for the next few minutes, just as a way of giving you a feel for how interrelated the world of insurance is and what each player's position is within the system. First of all, let's start with the agency, the most natural spot. Agencies sometimes are organized in different fashions. Your agency may be organized with all CSRs doing joint functions, the producers doing joint functions. You may or may not have a claims representative. You may or may not have accounting people. You may or may not have a marketing department. And then, of course, you have the managerial and supervisory people. Other agencies subdivide the whole agency by line of coverage. You'll have a life department, or benefits, often is over in the life department with health. You'll have a commercial lines department, which is where the larger commercial accounts and the business accounts are handled. And you'll have a personal lines department, which is where they handle all the personal coverages such as auto and home and personal lines umbrella and things such as that. Still other agencies organized by alphabet. They organize by account size. There's just no end to the ways an agency can work. It also depends on the size of the agency. Many of the agencies in the United States consist of only 2 or 3 people. There are others that literally employ hundreds. They're all agencies, and they all perform basically the same functions, just in different ways. So, for example, let's take a job of a CSR. Where exactly do they fit into the agency? In fact, let's make it a personalized CSR. Well, first of all, whenever there's a personal lines account, there's a good chance that one of your responsibilities will be to talk to them on the phone. Someone calls the agency asking for information. Now, there are agencies where that call may go to a producer, but let's assume for right now that it would come to you. In that case, you may handle the account from start to finish, answering their questions, talking to them about their needs, even selling them the necessary insurance, or you may pass that information on to someone else in the agency, and they will finish that transaction. However it happens, let's assume now the auto or home or personal lines account is, as they say, on the books. It's been written, the policy's been issued. Now what does the agency have to do it? Well, you've got accounting. Somebody's got to track the financial side of that. And in fact, the accounting is where the agency makes its money, which we'll come back to in a minute. You also have who's going to be responsible for claims that may come in on that policy. Some agencies have claims representatives in the agency that will actually handle the entire transaction. The more common is that the person in the agency, perhaps even you, will take the basic information on the claim and forward it on to the insurance company or a claims adjustment company, whereupon they will handle all the actual settlement of the claim and simply notify you as to what actions they take. Now, let's follow a claim for just a minute, and then we'll come back and talk about other things in the agency. The claim comes in, the call, person comes by, and let's just say that your responsibility is to fill out the initial report of claim, generally on an ACORD claims form, and then turn it in to the proper company. At that point, the company may handle it with their own adjusters, the person whose job is totally handling claims, talking to the claimant, digging through the facts. If there's another party involved, like in an auto accident, getting all the facts on both sides, deciding how much is going to be paid, deciding who's responsible to pay. That person's known as an adjuster. Now, they may work directly for the insurance company, or they may work for an independent adjustment firm. There are quite a few out there, depending on the part of the country you're in, who will handle that. But in all cases, what you want to do is be sure you're aware of who's handling the claim and what can you do if it gets stuck somewhere in the pipeline. Because the insured is always going to assume that you are handling the claim, no matter who else is doing it. So in that sense, the agency is only a piece of the claims process with the adjusting company or the insurance company, but you're still the point person as far as the insured is concerned. Be sure you follow that claim through and make sure it's properly closed and the insured either gets their money or gets the proper answer, because ultimately the relationship is going to be with you. Now, let's take another possibility of the agency, that accounting department. You bring in a policy and you write it and you sell it. How does the agency get paid for that? How does everyone's payroll get handled? One thing you find in a lot of agencies, and I'll just touch on it briefly, is sometimes staff in an agency, the support, the service people, the people that stay in the agency all day, are generally paid on salary. Producers, agents, again, it varies, but are generally paid on commission. And sometimes people see the business differently, saying, well, I have to sell that policy because otherwise I don't make a commission. Well, it's not as important to the person in the office to handle that policy because they're not on commission, they're on salary. Well, first, let's hit that one head on. The entire agency is on commission because that's how the agency makes its money. Now, how the owners of the agency divide up their commissions in order to pay salary or bonuses or commission to the people in the agency, that's entirely up to them. That can vary by agency. If you're out and about and you hear someone talking about how they get paid and it somehow sounds like such a better deal than yours, don't immediately jump to that conclusion. Go back to your agency and see how you're being paid out of the commissions the agency has available. Now, where does the agency get those commissions? The insurance company. When you send off an application to an insurance company, or even several insurance companies in some cases, the company that finally issues the policy collects the premium, and a part of that premium comes back to the agency as the agency's commission for selling that policy. That commission also represents a payment to the agency to service that policy. Each year you keep that policy in effect, the agency will get paid another commission. Now, the amount of that commission is determined by a contract between the agency and the company. Don't worry about that. Sometimes you'll know what that is and sometimes you won't. The key issue is only through the sale of insurance and the keeping of that insurance on the books does the agency make its money. So no matter how you're paid, you're really on commission. The insurance company pays that commission for that business, in return for which the insurance company takes the risk. It's the insurance company that will pay the claim, not the agency. It's the insurance company that's responsible to make sure the claim is properly adjusted, not the agency. So the insurance company handles the risk, they handle the guarantees, the agency generally handles the sales and service, and you may have an adjusting firm that specifically will handle just the claims. Within those three entities, you pretty much have everybody in the insurance industry. Now, you can subdivide those in a lot of different ways. For example, there's more than one type of insurance company. There are what they call stock companies, and there are mutuals. Now, there's some other kinds, but let's just stick to those two for right now. Mutual insurance companies are actually owned legally by the policyholders. Think of it like a mutual fund in that sense. The policyholders who buy insurance from that company are the owners of that company. Each policy represents a share in that company. And usually you have these companies, we'll talk about dividends, some do and some don't. But they really have no owners other than their own policyholders. So legally they're set up to serve their policyholders exclusively. A stock insurance company, on the other hand, does much the same thing, but they have stockholders. Like, you ever see the New York Stock Exchange, General Motors, Fortune 500, these kind of companies. This insurance company will actually issue shares of stock, and the owners of that company are those who own the stock. Now, they may or may not own insurance with that company, it doesn't matter. They own stock in the company, they are the owners. Therefore, that insurance company has a responsibility to make a profit for their stockholders, as well as properly handle and service their clients. Now, is one company better than the other? You'll hear people argue it both ways, but remember, neither company can survive if they don't keep their policyholders happy. A stock company can't make money for their stockholders unless they keep insurance on the books. A mutual company can't keep their policyholders happy unless they keep their insurance in the books. Now, the two types of insurance companies, when you get to the real world, really don't matter that much on a day-to-day basis. Obviously, a stock company can't keep in business and pay dividends to their stockholders unless they're keeping their policyholders happy. And clearly, a mutual company has no one to keep happy but their policyholders. Both of them are going to have to service, sell, and properly handle all of their insurance policies, or they're going to be out of the business. So there is a financial difference between the two, but not a huge difference. One other thing you might deal with in the insurance company side is whether or not they're standard companies or what we call excess and surplus. Now, there will be a later lesson on that, but for right now, standard companies are going to be the companies you represent every day, day in and day out. The agency has a contract with these companies. They're generally well known, either nationally or regionally. Excess and surplus companies are in the marketplace for very specific types of risks. Now, that may be an account that currently can't be written in a current marketplace because they're having problems with it, or it's considered very high hazard. It could be an account that is really not up to the demands of the standard marketplace. It could be an account that has overseas exposures. It could be an account that has a very risky exposure to just one certain thing, like asbestos or pollution. That marketplace, the E&S marketplace as it's called, excess and surplus, is a very specialized marketplace that's extremely valuable for independent agencies or any type of agency to utilize when it's utilized properly. But again, most of what you'll be doing in the agency is working with what we call standard companies, which are generally national or regional. Back to the agency for a moment about commissions. Now, remember the picture is we've got the adjusting firms that handle claims, we've got the insurance companies that handle the servicing and the underwriting of policies, and then you have the agency that sort of brings all of this together and connects it to an insured. We talked about the agency getting paid commission. One thing to keep in mind is that's all the agency generally gets paid, which has to pay for all the bills. One way to think about this that might be handy is to take $1 of commission that comes into the agency and say, where does it go? The agency out of that dollar has to pay rent, heat, maintenance of the building, expenses, group insurance, whatever you can name that has to come out of the pocket of any business in order to operate comes out of that dollar. Any money that's paid to a producer or a commission to anyone in the agency has to come out of that dollar. Any ownership interest that the owners of the agency want to take home as far as profit has to come out of that same dollar. So really the dollar of commission covers everything, one piece of which is compensation, salary, commission, things such as that. So when you're working in the agency, keep in mind the goal is always to maximize the profitable insurance you can write, because the more commissions the agency brings in, the more commission they have available to pay all the overhead and all the other expenses, and obviously the bigger the pie is in order to pay compensation. Without your help and without everybody working together, including the adjusting firm and the companies, to keep clients happy, no one is going to make any money in this business at all. It is in all of our best interest to work together to keep the client happy, and that way we all make a good living.